They are young, they are eager. They want to be Bill Rhodes, bankers to the world, working at the international level, or even better, working the glory of transactions and combinations like the late Jimmy Lee of J.P. Morgan. There's still a romance to banking, but will the banking industry be there in 5 or 10 years for the new Bill Rhodes, for the new James Lees? With us, Bill Rhodes of Citigroup. Yesterday was amazing, the service for Jimmy Lee. It was the gathering of the clan, if you will. I was there with our Betty Lou and others from Bloomberg. Michael Bloomberg was there as well. Is this industry going to be around in 5 or 10 years? Are you going to be able to go to Williams or go to Brown and say, hey, kid, you can be like Jimmy Lee, you can be like Bill Rhodes?
Well, I think there's no doubt there's a real challenge with shadow banking, the legislation, Dodd-Frank, and other versions of it, Volcker Rule, that are out there. But you're still going to need a transmission mechanism, and I think that banking will be there. It'll be changed somewhat, but it's going to be there. But we got to get back to the basics where culture counts.
And community.
Exactly. And this is a study that I'm a co-chair of for the Group of 30, where we're talking about culture and conduct in the sense that banks have to really go back to that idea where the customer comes first. The community must be served, and you must create trust within the community that banking is something that's positive.
Can you do that in a world of derivatives and financial engineering, where everybody's trying to make the next marginal basis point?
You're going to have to do it, because if you don't have the trust of the community, then the regulators and the politicians will just keep piling on regulations, and you will see banking turn into a utility. So I think, yes, with all of these scandals, LIBOR, exchange, all of this stuff, I think the banking community now understands that it's got to go back to some of the basics on culture and conduct and trust.
How do you break out of that cycle? That's something that we've been watching for a while, which you have a change in culture that leads to ethical lapses, which leads possibly to overregulation. How do you actually make cultural change happen?
Well, you cannot, if you're a regulator, you want to see the cultural change, but you cannot decide that. You can decide capital levels, liquidity levels. Culture must be designed, implemented, and frankly, disciplined within the company.
Do you
itself.
see that in Mr. Corbat at Citigroup or Mr. Diamond at JP Morgan? Are they a new generation that can give
Yes,
that
I believe
forward?
they can, and this report we're coming out within a month on culture and conduct by the Group of 30 gets into this. But also there's got to be discipline, be it compensation or even firing when people do not do it. And it's got to start at the CEO board level, chairman level, right down to the teller. And that's the way it was, Tom, when I started in banking in the late 1950s.
Where were you a trainee? Where were you first a trainee? Citigroup?
At Citi, yeah.
He was like at Citigroup, Alexander Hamilton.
But you know, it starts with discipline at the compensation level, possibly even firing. What about the possibility of real personal prosecution? That's something the Justice Department has shied away from. Would that make change possible?
Well, I think you're probably going to see some of that because, you know, the fines have been enormous. But I think in some cases you probably will see that. But I think more importantly, too, is that the institution itself has to discipline itself. One is compensation, and the other is firing. One other thing that's being looked at is when you take a look at these traders who go from one institution to another, and there is not a proper checking being done on what their record was. And so I think you're going to see more of that, too.
Well, Bill Rhodes, thank you for your comments on the future of banking.